Good morning, guys. Good morning, guys. It's Ubuntu Lady here. So, as we were speaking the other day as well, so today we are on a different chapter. So, today we're gonna be on the topic of the imbalance, right? So, other than that, guys, I just want to say Happy New Year. I hope you finished your 2023 very well. Now we are ready to make the market this 2024. So welcome back to the YouTube channel, to the Ubuntu YouTube channel. So if you are new to this channel, please like, subscribe and share and comment below if you've got any questions so that we can be able to assist you in everything that you seek. So without wasting any time, let us quickly just jump into it and assist one another of what is it that we are talking about, or what is really that it's happening in here, so that you guys can be able to understand, right? So now we're going to be talking about the important chapter of which is what we call the imbalance. This chapter is basically whereby now we're going to learn as much as possible because you've been learning from the previous ones. So remember, as you can see, we aren't trading based on the imbalance zone itself, but rather using it as a confluence to strengthen our decision to the target of an order block entry. An order block that acted as the point of origin for such disruption in price is considered a high probability entry point, right? So here's the thing. An order block, there's so many order blocks, but there's that order block that is so very volatile, the one that has got like a high probability entry point. So that's what we're looking for, those ones. So let's continue. So when it comes to imbalance or inefficient zones, there is no telling when they will be filled, or where. When we know that certainly there will be first time that there will be when is the right time for it to be filled. So we don't know when is the time whereby the order block will come and be filled. So that's why we do not just want to try to trade them by their own. It is important. It is an important tool to keep in your arsenal when analyzing these markets. So let's quickly jump into this example over here to see what's really happening over here. So now, as you can see, that this is a lower time frame or order block, right? This is an all the lower time frame order block. This candlestick, this one over here, it's an order block. Remember, the order block, we're looking for the last candlestick or consecutive candles in the opposite direction. So this is one of those candlesticks in the opposite direction, right? But then price moved in one direction rapidly, and it left an imbalance or inefficient in price delivery. So the price was only delivered one way over here. As you can see here, it's been balanced. It's been like the up and down candlestick, the B and the bull candlestick. But over here, we had couple of consecutive candlesticks whereby sorry guys, I just decided to quench the thirst and to drink some water. So you'll please bear with me on that one. So now back to business. So I wanted to show you that once price move in a different manner or in a very same direction, we now have to mark the area and wait for price to come and return back to it so that we can come and trade it again. So as you can see over here, now price was starting to retrace back, so it left like an imbalance on this direction. So that was another signal, or that was another sign. Someone can see an inverse head and shoulder over here pattern, but we do not trade according to those. We're just looking for where is it price likely to go. This is where price is likely to go, because there's an order block that has got an imbalance on it. This is whereby we know that this is a high probability order block entry point. So once we have marked that, we're now going to mark our levels and then we enter. So price it reached over there at the top, so that's when it was just coming to what, to refill the imbalance. That's why we took our entry point over here and then the price continues to drop, continue into the anticipated direction. That's what we've been looking for. So now, other than that, as long as you understand the logic behind what is an order block or what is an inefficient in price delivery, so this is an imbalance. This, so there must be, it's a three candlesticks that have got, there's no wick in between. That's where you see, even over here, 1 2 3, there's an imbalance between these three candlesticks over here. So it's only the bodies, only this one that got filled over here. They never fully filled this one. Thank you. So you just have to be smart of which one you're going to go for, right? So this is an imbalance, so there must be like three candlestick, and in between those three, this low of this candlestick and this high of this candlestick, there mustn't be any body or any candlestick in between. So there's nothing that makes it a high probability entry point for the imbalance. Same here, you see 1 2 3, there was nothing, but price came to fill it. Once it get filled, so this one is no longer valid because it's been filled already by these two candlesticks, these ones over there. But if this candlestick wicks, they were on above this, never been below this, then we could say this is still a high probability setup, so which what price is likely to come and retest. But over here, it is already punched in through what, the imbalance. So it's not likely to just that it's going to fully complete this or fully come and trace back to this. No, sometimes it just like does something like this. So it's always wise to know when to trade them and when not to trade them. But you have, if you have any other direction or you've got any other question that you like us to briefly explain it further to you, DM us or comment below with a question, then we can be able to assist you. Other than that, see you on the next episode, of which is what, now we're going to be talking about the liquidity. But other than that, guys, see you on the other side of the withdrawal. This is Winkle Lady signing out.